So silver obviously has a little bit cleaner of a pattern. We saw like a little inverted head and shoulders down here, broke out from that after the technical breakdown of a key support, which was essentially this channel that we were operating inside of. This was starting to look pretty bearish. We were able to reclaim that level though and get our reversion to the mean, the retest of the 200 exponential on simple, which, you know, obviously we are under. They have flipped over bearish. So on the daily, we have technically entered into a bear market at like this $25 range. We're attempting to reverse that now. We're above the 200 exponential. We've put in a larger version of an inverted head and shoulders. So we have obviously our left shoulder, our neckline, our head, our neckline, our right shoulder. Didn't quite get to where I was expecting it, but roughly. And now here we are breaking through our neckline, potentially going to get the measure move, which is again from the head down here to the neckline right there. So that measure move would potentially take us back up to the top of the range, the same level that we have gotten rejected on over and over again every time we got there, which is roughly like 28.50, something like that. So again, while I am cautiously bullish on silver, I am cautiously bullish on silver because, you know, it still doesn't look great. There's definitely starting to show some life, some potential, but it doesn't look great. So essentially what I'm seeing here is, you know, again, same exact thing. Now the difference is silver topped out in 2011 right here at its previous all-time high of 50 something dollars. But when we came back up, we were not able to get back to that same level. So here gold was making an all-time high, and then this run back up, gold made an all-time high again. Silver did not even come close to its all-time high. You know, if the all-time high was just by candle closes like $48 to $50, you know, we basically came up 66%. We only made it up to like $30 this time. So silver is arguably much less bullish than gold. So while people are saying it's undervalued, it's underperforming. I'm not sure that it's necessarily undervalued. There's a strong argument for it being undervalued, but also, do we buy the strongest horse in the race or do we buy the weakest horse in the race? So if your argument for investing speculatively in silver is that it's undervalued because it's the only thing in existence other than basically, you know, uranium and oil that have not put in all-time highs, that's not a good argument in my opinion. You're basically buying a loser. Why would you buy a loser? Why not buy a winner? So, you know, buy something that's putting in all-time highs now. But again, I don't use silver necessarily as a speculative play. I use gold and silver more like a, you know, insurance policy or savings account for my gains from, you know, investing or trading in other assets. So, you know, and obviously like the insurance factor. You know, imagine if every month you pay your car insurance, your house insurance, your health insurance, and if you don't use it, they give you, you know, a gold bar instead. That's how I look at gold. You know, you're basically just putting that money away. You know, it's an insurance policy. If something goes wrong, you have it, but you hope that you never need it. The difference is your premium doesn't just go to nothingness. You know, you get it back in a form of a shiny gold or silver bar. So, but here on the weekly, we have broken back above the 200 exponential and simple. The 200 exponential is above the 200 simple. We essentially got that reversion to the mean move. We slightly front ran it right here. But I'm not convinced that we don't come back down and touch it eventually. So while there's still some serious potential for a retest of silver in like 21 or possibly even the teens, to me that looks like a buying opportunity. So, but again, cautiously optimistic on silver because it is an underperformer for a reason. It's underperforming for a reason. There's not enough buyers or there's too many sellers to push the price up higher. So what does that tell me? Well, until something fundamentally or, you know, technically changes, it's still a loser. So we don't bet on losers because we're not buying lottery tickets here. We're investing, we're trading, you know, we're doing intelligent things. So while I do love silver, I do hold silver, I am optimistic on silver, you know, I'm not an idiot. And then finally, while we're looking at it right now, we can go ahead and talk about something very important here. You know, since I talked about this, I have actually heard some other people talk about it as well. So it is kind of nice to know that I'm not the only person that actually sees this. But, you know, we basically have like the world's largest cup and handle pattern ever developed on silver. And again, we spoke about the cup and handle a little bit earlier, but let's take a look at what we're looking at right here. So obviously we have our double top. This top right here is from, you know, the Hunt Brothers 1980, or no, this is the 1980 top. This was the Hunt Brothers top right here. But we basically have a giant cup that we have formed now. You know, obviously the low being down here, you can kind of draw this however you want. But, you know, we basically topped out at $50 in 1980. and then we bottomed at $3.50 roughly in like 92, and then we double topped here in 2011, and now that's our cup formed right there. And now if we look at our handle, what is the stipulation, or what is the strongest type of handle? Well, this is exactly what we were talking about, where the number one strongest handle that you can get is basically a descending channel. So depending how you want to draw it, I would argue that it should be drawn like this, but you could draw it however you want to. But typically, or the strongest type of handle formation is a descending channel. You finally get the descending channel break. You hold the top of the channel as support. You can still put in a low after that, but you don't make your way back inside of the channel. You don't break down into the channel. So here we have the beginning of our handle pattern forming, the retest of support, as resistance as support rather, consolidation pattern, and then we get that break to the upside. Obviously, this little anomaly like paper trade sell-off in silver took us down to like what, 1150, but that was not real. Obviously you couldn't buy like spot silver. It was still like $25 to $30 with premiums at that time. So but again, we have now formed what amounts to, not completed, but what amounts to our handle pattern here. So we can just kind of drop this in place. When is this going to play out? When does this break out to the upside? Are we almost there? Is it going to happen tomorrow? Is it going to happen in 10 years? Well, we don't know that. We have literally no idea. But at this point in time, we have a giant cup. We have a technical descending channel. And then we have our handle formation as well. And then obviously we know for a cup and handle move, this is where silver starts to get excited. We can measure from the bottom of the range all the way up to our neckline, or like the top of the cup. And that's going to give us our measure move breakout. And assuming we do ever actually break out of this pattern, we'll put our breakout level at that. And then we can kind of zoom up and see our target. And we'll see our target is roughly like $90. So a breakout to the upside, a technical breakout of this cup and handle would have a target to the upside of $90. Now, is it possible we go much, much higher if we break out of a pattern that we've been in since 1980? Well, yeah, definitely. Definitely is much, there's definitely potential for a much higher target. And the way we would get that, obviously, based on technicals, not just like Moonboy made up fundamental targets where we say silver to 1,000, silver to a gazillion, silver's going to rule the world, silver's unobtainium. No, we'll look at actual Fibonacci extension targets. In this case, my macro target, obviously the 1.236 would be that $90 range. The 1.382 is not really one of my main targets, but that is 130. The 1.5 is 177, but overall my target to the upside on silver is the 1.618, which is $240 per ounce. So do I think we go to $240 per ounce anytime soon? No, we probably never break out ever. Silver probably goes back down to $10. No, not really. But let's not get excited, okay? This will probably, based on history, we will all be dead before silver ever breaks out to the upside. But if it breaks above that $50 level, that's when you'll hear me singing a different tune, talking about this is it, it's finally happening, now is the time, et cetera, et cetera. But until that happens, it's just going to look like a potential, just another top. And more than likely what happens is we get back up to that, we push slightly higher, and then we sell back off, consolidate for another like 5 years, whatever, et cetera. So, but roughly, just kind of like looking into the future, this is what, pointing to like roughly, 2025 or something like that. So, we've got some time before our little technical breakout happens. Now, this move right here, though, could happen very quick after that. We could see that by, 2028, 2030, we could see $250 silver. And that's where that's going to line up with like your EVs and like battery technology and, electrifying the world and solar and all this other crap, that people are talking about. Is it realistic to me that that's like, a process that happens over the next 10 years? It definitely is. But for the people that are calling for like silver squeeze 2.0 and like the Wall Street silver guys and all these people that are like, this just isn't fair. They're holding down our prices and we can't get our silver pumping. They're mean. It's manipulation. Well, get used to it because it's been going on for, 40 years and it's probably going to be going on for a lot longer than that. So, chillax, invest in some other things and, wait for your time. Don't just sit around and give yourself a coronary, waiting on the pump and getting mad at people like old Arcadia economics where the dude looks like he's about to like have an aneurysm every time he talks because he's tired of the manipulation. But anyway, I'm definitely a beneficiary of the, silver bulls because I win if they're right. So that is our silver chart, XAG, and the macro outlook on that. Obviously have some long-term price targets to the upside. But again, we're at a very difficult level right now just to get above this 200 exponential and simple. And then once we get there, we're going to run back into resistance again at that $28 range. And then depending what gold does, do we get the triple top breakdown from then? Do we go sideways forever? Do we lose a bunch of value? Or does silver go to the moon? Well, only time will tell. Now let's look at our gold silver ratio chart here. Man, these charts are getting ugly. I might have to just redraw these soon. So this is our gold silver ratio chart. Obviously on the, let me switch over to the weekly actually. I prefer to look at this on the weekly just because it goes back so far. It gives us a little more accurate of a view. But this was our CVD top right here, all-time high for gold to silver ratio. It was taking 128 pieces of silver to buy one piece of gold. Obviously blow off top, and then we break down from then. This entire time was when you should be investing in silver instead of gold. And then once we bottomed right here, we got the cross back up between the 8 and 21. And this is when I was talking about this is the time to be investing in gold over silver, or putting your savings in gold over silver. Again, I'm not saying sell your silver or sell your gold, but if you're going to put a certain allocation, or profits from your trading account, or whatever your daily, weekly, monthly, investment is going to be, this tells you which one you'd rather be investing at the time based on if silver or gold is under or overvalued. So essentially we get that move back up here. We get the reversion to the mean, the retest of the 200 exponential and simple. Obviously we were below it. We were technically in a silver bear market while we're under this in comparison to gold. And now here we are trying to consolidate and move back to the upside. So we still have momentum in our favor. We had the hard sell here around the top. Obviously broke down from the bullish control zone. But what we're paying attention to now is, does this come back down and essentially form another one of those head and shoulders patterns, the inverted head and shoulders? Do we get a slightly lower, gold silver ratio? So it only takes 70 pieces of silver to one gold as silver runs back up to that like $28 level, as gold runs back up to that triple top, and then it fails and we break to the upside on this chart, telling us that we're probably breaking to the downside on the underlying commodity. Or maybe gold is going parabolic to the upside, but silver's just kind of going up. Well, we don't know. We'll have to wait and see. But what this tells me is more likely than not, we're going to consolidate here for a bit, and then we're going to get at least one more retest of the 200 exponential and simple. And then if we just look at my target to the upside, again, we had a very clear resistance along the way, broke out of that resistance. We had essentially a descending wedge. We get the breakout of the wedge, and now we're looking for the measured move, which is going to take us somewhere between our Fibonacci levels, which if we take from the top Fibonacci to the bottom Fibonacci here, that would give us roughly a move back to the 0.5. We have already reached the 236 here and fallen just short of the 382. The 382 lines up perfectly with the 200 simple. So that is my initial target to the upside. And then after that, my 0.5 is my target to the upside. So we'll wait and see. We'll see what happens with that. Maybe I'll be wrong. Maybe it underperforms. It gets rejected here and silver starts going bullish while gold, is not as bullish. Again, we have to just wait and see. But I think more than likely what's going to happen here is we're going to see this continuation. Now, again, before I hurt all the silver bugs feelings, if we look at this chart here, let's go to the monthly real quick. We can just keep in mind, based on what happened in the past, this was the all-time high in gold back in 2008, and then gold sold off in comparison to silver, and this was the top in 2011 of gold and silver. So that was when gold reached all-time highs. That was when silver retested its $50 all-time highs. And then at that point in time, it has been better to have gold in comparison to silver since then. And then obviously gold put in a new all-time high right here. So we have a high, we have a low, we have a higher high. So now what we're paying attention to is this the lower low, or are we yet to put in the lower low on this chart? So now we can just look at a couple of little technicals right here, and we can see that if we took our Fibonacci targets from that previous high right here to our we don't even need to use that one. Sorry, I don't know what I have drawn right here. Okay, yeah, all right, I'm sorry. That high right here to the low right there, the initial sell-off, that 1.618 Fibonacci extension was the all-time high that we put in on this run, a decade later or whatever. But regardless, that's not what we're paying attention to. We're actually looking at the other way around from where we bottomed right here till we moved up to the top, I have this blue Fibonacci extension target in place. So that was our bottom to our top of what amounted to the A wave down, the B wave up, and then the C wave down for the retracement. And the Fibonacci extension target we reached was the 3.618 to the downside, at which point in time we started going back in the uptrend, et cetera, et cetera. And then we have a macro from the bottom right here, Fibonacci, to the all-time high right here. So the all-time low on this chart to the all-time high on this chart. And then we'll pay attention to our pullbacks. And when we came down, we pulled back exactly to the 0.5 in green right here. So we did a 50% retracement of this. So is it possible this bottomed and now we're going to go back up to the 236? Or is it possible that we bottomed temporarily, we're going to come push up here, and then we're going to go lower? That's what I think will happen over time. I think we're putting in another ABC correction. So is it possible the B is already in and it's done? It is possible. But I think more likely than not, we will get a push back up to that resistance or to the 236, because from the 0.5 to the 382 to the 236 will be a 2 fib level bounce, which obviously is something that I see very common happen. We also have a hard buy signal coming out of the bearish control zone. We also have multiple green histograms as well. Now that took place at the absolute bottom of the pullback. So is it possible we already did the ABC? It is. Is it possible we did the A and the B is done? It is. Is it possible we continue up and put the B in higher? It also is. But I think over time, we will see a lower high on this. A lower low on this. And my target to the downside would be somewhere between the 1.618 and the 2.618 of that same move. So we don't know where that's going to be yet because we haven't confirmed where the B is. But assuming we already put in the B, if we look at from the bottom right here to the top right here, our 2.618 is going to give us the target of the 786 of the macro right here. The 3.618 would be way lower right here. But for all those massive silver bulls out there, we're talking about like a 32-to-1 silver to gold ratio or a 41-to-1 silver to gold ratio. So, there's definitely some potential for these like crazy gains. Now, if we come all the way back up here on top of the 236, a sell off to the 1.618 would give us roughly a 50-to-1 gold silver ratio. The 2.618 will give us a 34-to-1 gold silver ratio. So there's definitely some reason to be bullish on gold and silver into the future. But again, we have to be very cautious because, we're looking at a top in 2008 and then a top in 2020. So we're talking about like 12-year commodity cycles, not some little bullshit like 1 or 2 year cycles where if you got to take a little drawdown and you got to just hodl through, you're going to be okay. No, these are long, painful cycles. So, but yeah, there we have it. And we can just look at the daily really quick while we're at it. The thing I'm paying attention to on the daily right here is, we basically entered into a bear market on gold silver ratio in July of 2020. We were able to get back above the 200 exponential and simple. We flipped them back over blue here in September of 2021. And now here we're finding support, potentially putting in a daily head and shoulders, which would be like, push down, retest, try to maintain these levels. If we consolidate here long enough, though, like I said, I expect continuation to the upside. If we fail to hold this level and sell back off, that would confirm to me that we have put in the A, we have put in the B, and that silver is going to go parabolic in comparison to gold. So, but yeah, there's a deep dive on gold and silver and the ratio between them.